Hello everybody and welcome to the webinar on the government stimulus package, what's available for your business. We've got a lot of people attending today, so if everybody wants to just raise their hands just so I know that everybody can hear me. The raise their hands will be down at the bottom. Yep, I can see everybody raising their hands now. So basically, I look forward to presenting this webinar, and it's based around the government stimulus package that's been offered as a result of the coronavirus. So my name's Bryn Harwood. I'm the CEO of Tradies Accountant, and I'm passionate about building relationships with business owners and learning about their business. I've been involved in the accounting space for 17 years, and I have to say over 17 years, I've never seen so many updates in such a short span of time. So there's so much new stuff coming out and as a result of this coronavirus, it's amazing. I've also got today as panelists, I've got Natalia and Kelly both on. As we work through the presentation, people may have questions. So what we're going to do is open the questions up. Natalia and Kelly will be able to go through and answer those questions. So I'll get to that in a little bit. So Tradies Accountant, what do? We help trade business owners. We help them with bookkeeping, so implementing systems and process to help improve the bookkeeping process. We offer taxation and taxation services, whether it be structuring or BAS or company tax returns. And then we provide consulting advice to help improve profitability and cash flow. Obviously, we're specialists in the trade space and we only work with clients that are in the trade industry. So here are some of the companies that we're affiliated with. We work with Pro Trade United, Master Plumbers in Queensland, the Shop Fitters Association in Australia, and Nexia, a software company for shop fitters and construction companies. Okay, so just a few bits of housekeeping. For some people, this might be their first webinar. If that's the case, take some notes, just sit back, listen. We'll also provide a recording of the webinar to people later, so in their own time, they can listen back through it. If you have any challenges, raise your hand and we can solve those. So you'll see on the bottom panel, you'll have a raise hand or lower hand. There's also a chat box at the bottom. So if you need to ask any questions, you'll be able to click on the chat box. And there's a Q&A box to be able to click on that. Just remembering that we can't answer any specific questions. So if the question's specifically related to your company, we're not going to be able to answer it. The questions are only for general questions because it's not advice. We're going to make the webinar as interactive as possible. So please feel free to ask questions, get involved. We want to make it interactive. The webinar is going to go for roughly 40 to 50 minutes. We'll have another end part where we'll just do any following questions people have and we'll try and answer those as well. Also on our Facebook, if you go to the Facebook site, there's a link to the website which will have a lot of resources. So there's extra resources on there that you'll be able to click that will give some of the information that we're going to be talking about today. And yeah. Hopefully look forward to being able to provide some value out of the webinar. So what's going on at the moment? Obviously, this coronavirus has severely impacted a lot of businesses and a lot of business owners. I don't think many people in our generation have ever been through something quite like a pandemic. So, a lot of businesses have been negatively impacted by the shutdown. So I think one of the biggest questions I'm getting asked is how long is this going to go for? Is it 3 months? Is it 6 months? Is it 9 months? And nobody knows. I don't know. I can't answer. We can't provide clarity on those. But what I can say is that if you're doing projections or you're doing cash flows or you're trying to look at, how long you can last, taking a conservative approach to that's probably the best. So anticipating a longer lockdown or restrictions on movement would probably be better than anticipating something that would be shorter. What I've noticed, spending has come to a halt for some businesses. And for other businesses, spending is still the same as it was before. So there's no, every business has been affected disproportionately. Anxiety around the financial impact of coronavirus, and especially on the impact to your business. I'm sure a lot of business owners out there have had some anxious moments due to the shutdown or the restrictions. So the reason that we're doing the webinar today is basically to talk about some of the incentive that's been offered from the government as a result of the shutdown of the business. So all of these things that are going on have obviously led to all of these incentives being offered. And what we're going to cover today is a majority of the incentives. There might be more there that we're not covering, but we are providing a lot of links to different sources that you're able to go through and get the additional information if required. So I was just going to do a quick poll to begin with, and just to get an understanding of what your current knowledge is around the PAYG boost. So I'll just be 3 answers there. What is your below understanding of the PAYG boost? A multiple choice, total understanding, have a basic understanding, or I'm not sure at all. I'll just give people a little bit of time to answer the poll. Yeah, so coming through, it looks like, you know, roughly half the people in the webinar have a basic understanding, and about 10% totally understand, and 24% are not sure at all about it. So the PAYG boost, basically it was the government's first announcement to try and put money back into small business, understanding that it doesn't necessarily directly put money into small business because it's taken a while to get to the BAS level. So it's not in a quick injection of cash, but I think it was probably the fastest way the government could try and put money into small business and help them with the payroll function, which is probably the biggest stress for a lot of business owners. So at the start, they announced that they were going to do a $50,000 PAYG maximum boost, and there was a minimum on there of $10,000. I might just end this poll and actually open up the Q&A as well. So if anyone has questions on this, they can start to answer them in the question box. And you can also go on and the question box will be on the bottom panel. So if people have questions, just ask them on there. And you can also thumbs up for the questions if you want that to go to the top, depending on what the questions are. Natalia and Kelly will go on and try and answer the questions as I'm talking. So it started off as a maximum of 50,000 with a minimum of 10,000. And basically once you lodge your BAS, it was going to be applied to the PAYG. And then the amount, if you had an ICA balance, it was going to be deducted off the ICA balance. And if there was anything left over, it was going to be a refund. So that's how it started out. And then I think as things continued, they extended the PAYG boost out and made it to a minimum of 20,000 and a maximum of $100,000. That's over a 6-month period. Now, the way the boost works is it works differently if you're quarterly or monthly lodging, depending on how you lodge your business activity statements. Now, a lot of questions we've been asked around the PAYG boost is, can I put myself on payroll if I haven't been taking payroll? And the answer to that is no. You can't just put yourself and artificially accrete it. There's a lot of alerts coming out around trying to do that. If you've been taking trust distributions and you've always been taking trust distributions, you can't now restructure those into payroll and try and get the PAYG boost from that. Now, with the way reporting is, the ATO have a lot of visibility across payroll because of STP. So basically they can look on and see all the data analytics from the last however long they've had the STP, to see if people are changing their PAYG patterns. And what we're hearing is there'll be a lot of audits coming out as a result of people trying to game the system, so to speak. So that's generally one thing that's popped up a lot for us. The other one is obviously, can you claim the PAYG, or do you get money back if you had an ICA balance? And obviously, if you've got an ICA balance or you owe money to the ATO already, it's going to deduct off the money you owe to the ATO currently. Did anyone have any questions around this at this point? I was just making sure everybody could see how the questions could come through. Obviously, I think most people have kind of got their heads around the PAYG boost. Oh, here we go. What is an ICA balance? Yeah. So your ICA balance is just your integrated client account. So it's just the money that you owe to the ATO, or if you do owe money to the ATO from GST or other amounts that had previously been on there. I think everybody's kind of got an understanding of how this PAYG boost works. I think it was a good strategy by the government, because it quickly put money into business that needed it, and it put it into on us paying payroll. So probably the businesses that were hurting the most are businesses that had a lot of payroll. So the next one was the JobKeeper payments, and this one's probably going to be one of the big ticket items that we're getting lots of questions about daily, I think now. The government did come out with some forms and some more information about JobKeeper payment just this morning. So there's a lot of information coming around JobKeeper, and there's not a whole heap of clarity at the moment for people trying to advise on it. So it's been a hard one to keep on top of. But basically the JobKeeper payment is for employers, and they're going to receive a $1,500 a fortnight subsidy for employees. If you're under $1 billion in turnover, you must show a drop in revenue of 30% as provided by activity statements. Generally, that's going to be compared to the prior year. The payments are made in fortnightly blocks. So every fortnight is when they're assessing it, and they're paid in fortnightly blocks. Did we have any questions around the JobKeeper payments specifically? Not at this stage. So the main points that we had with the JobKeeper payment, obviously there's a lot of uncertainty about how you're going to determine whether you've made a 30% loss. And I think that the guidance that's coming around that is that the 30% is going to be based on activity statements. If you haven't made a 30% loss yet, you can do it on expected loss, and then you'll be getting assessed by the ATO. So you'll be able to provide more figures to the ATO. Probably particularly important to suppliers that are supplying businesses that haven't yet felt the impact of it. But some of the things we have here is do not do artificially increase payroll to receive the benefit. So once again, anyone that's trying to then put themselves on payroll, pay director bonuses, if they are looking to pay one of their relatives, for example, all of that stuff will be seen as gaming the system. So definitely don't try and change your payroll to try and increase the benefit that you'd receive. Or the other one is artificially creating a 30% loss to receive the payment. So the government's pretty tight on these rules, and what we're getting told is that it could be a criminal offence, and you could face up to 10 years imprisonment for trying to game the system. So they're definitely things not to do. Also, I think you need to be very careful about what the HR laws are in relation to the employees. So you're definitely going to need to get legal advice on if you have employees, for example, that are earning above the $1,500 a fortnight, but you can only now afford to pay them the $1,500 a fortnight. How does that work with the employment contract? And I think the answers to that question obviously would be you want to speak to your lawyer about how the employment contract works, but you may have to have them on a fewer number of days a week, or reduce the actual days down so it only works out to the $1,500 a fortnight. So there's a few, we've got a lot of links to this as well. So if people check the Facebook, they'll be able to see that we've got links there that will go to the website, which have a bunch of links to the JobKeeper payments. Also the forms that just came in this morning, we have some links to the forms that need to be filled out. I've got a few questions in here. I think the girls will get on to answering some of those questions as I move on to the next ones. Yep, there are a fair few questions coming in. For casuals who are earning less than $1,500 per fortnight in April, are they still available? Yes, if they're earning less, from my understanding, they will be still eligible, but they have to have been on the books for 12 months or more. So I think that should answer that question. As long as they've been on the books for 12 months, then they'll still be eligible for it. Okay, moving on. So the next part was about, if people have questions, just keep putting them in the question box and we'll move through and keep answering them. So the next part was supporting apprentices and trainees. So small businesses employing fewer than 20 employees who retain an apprenticeship or trainee will be able to get 50%. So some questions that have came to us so far is, can they claim this and then also claim the JobKeeper payment? This is eligible from 1st of January, but you have to have registered by September. And the answer to that is claim this straight away. And I'm pretty sure they'll work something out with the JobKeeper so that they're not getting double paid. But I would imagine that you're only going to receive the extra 50% as a top up. I haven't seen announcements about that, but I would imagine that's how it would work. So I would say there is a government site there that you can go to straight away to register the employees, and then put a claim in for this straight away if you have employees that match that criteria. And when the JobKeeper payment comes up, then we'll be able to, they'll have some type of rebate, I'm imagining, on there that will help out in that situation. And temporary insolvency relief. Once again, this is probably a big one for lawyers as opposed to accountants. I guess most definitely the intention of this is to make sure that businesses don't fold over this 6-month period. In saying that, if you already had something that was going on pre this happening, you may want to speak to your insolvency expert or your lawyer. But any debts incurred in ordinary business over this 6 months, they want to look at not putting those into insolvency. And for the government, statutory demand has went from $2,000 to $20,000 for a 6-month period. Now, I've been getting lots of questions from contractors around this on whether now builders won't pay them, or there's lots of ambiguity about this because there's a 6-month period and the amounts went up to 20,000. Some of the regulatory bodies like QBCC, for instance, I think have come out and said that they're still chasing, the payments still have to conform to the Payments Act as it is. So I don't know how that will then relate to what they're doing with the Corps Act. So once again, that would be a question for lawyers. But this is just to say that, they're trying to make sure that not a whole bunch of businesses go insolvent in one space over this 6-month period due to the coronavirus. But definitely there's a lot of ambiguity about how this is going to be applied, especially in the trade industry. So it's definitely one to notice. Sole trader support. I know there was a question on there about sole traders. So basically, sole traders are able to get the $550 a fortnight supplement from the job seeker payment, formerly known as New Start. So definitely they can get that straight off the bat. A lot of people are asking, can they get the JobKeeper payment? And that would depend on the individual circumstances. So we wouldn't be able to answer that off the bat. But also employees that have been made redundant, they also have the opportunity to go to their super fund and potentially withdraw 10,000 up to 20,000 now. So they're able to do that through MyGov. Or I think if you're going to be withdrawing money out of super, speaking to a financial planner or the bank manager about your personal circumstances to see whether it's going to be kind of relevant for you to withdraw. But that option's definitely available for sole traders. So that's a support that's available at present. Leases. So there was a new announcement came through last night about leases as well. So there's a new code of conduct that they've put in place for commercial leases. And a lot of that's around landlords not being able to terminate the lease due to non-payment of rent. They're also offering specific waivers and deferrals for lease repayments. Once again, you need to go back and have a look at your lease agreement and discuss with your lawyer and specifically how this is going to relate to you. But I think in the big picture, you should be looking at, how much you have to pay for your lease. If your revenue's dropped by 30% or 40%, then, going back to the landlord and saying, this is what's happened, this is what we've dropped to, and then trying to work out an amount with the landlord. My understanding from what I've read is that the deferrals will be amortized over the lease, and then they'll be amortized over a certain period. It can be no less than a certain period. So I think really you want to have good contact with your lawyer to be able to go over it to see if there's any changes you need to make in your lease. I think getting on the front foot would be the strategy, trying to get to the landlord, let them know about the position, let them know how the virus has impacted your business, if you have been shut down, how that's impacted you. And then, you'll be able to hopefully come up with some type of agreement where everybody's still comes out of benefit to it. So the next one was loans. I just had a quick poll I was going to run for the loans as well, just to say how many people have currently applied for a loan due to COVID-19. I'll just give a bit of time for everyone to go on and answer that one as well. Yeah, so it looks like 80% of businesses or 80% of the people on here haven't actually applied for a loan. I'll just share those results. So yeah, 80% haven't applied for a loan due to coronavirus. That's excellent. So we'll just go over these. So there are new loans that are available. A lot of people have probably already heard about the federal government's backing 50% of these loans to the bank. I've got this information here from Judo Bank because they're just the bank that we work with. But with this 50% that they're backing, it means the bank's only taking risk on the other 50% of the loan. So the SME loans are up to 250,000 unsecured loans. And this is the one from Judo Bank. They're over a 3-year period. The initial 6 month will be free from principal and interest repayments with just the interest capitalising on the value of the loan. And the loans will not be secured. They just have directors' guarantees. So basically, the way the loans work, from my understanding and people that I've been talking to, is you need to go to your current financial provider. So they're not for new business. If you're already banking with NAB or with CBA or whoever you're banking with, you go to them and discuss your position, and then they will be able to provide these unsecured loans. They are not for the purpose of refinancing. So some people have been asking, can I now refinance out my other loans? So I just saw an announcement from a few different banks that were saying they're only giving the loans based on working capital. And generally the way they seem to be working out the working capital is based on payroll. So up to 50% of payroll over a certain period. Every bank's going to have a different way that they assess it, obviously. But I think in general, the purpose isn't, it's not an opportunity to go and get these easy loans and then make investments or do other things with the business. I think the intention is really for businesses that are struggling to pay payroll, and they may be going to get the JobKeeper payment for that, but they're not sure, they're not exactly sure how they're going to pay payroll. They'll be able to use one of these loans to be able to pay payroll. So my advice around this is that you need to be on the front foot doing some projections based on how you think the next 6 months is going to look. And this is where it came into the start when I said we don't know how long this is going to go for. Is it 3 months? Is it 6 months? Is it 9 months? So you probably, there's going to be no clarity around the time. I think you need to pick an arbitrary number based on an assumption and say if it's 6 months and your revenue is going to drop by, let's say 40%, then if you can project that out and start to work out how much you're going to need from this loan. So I think it's important to get, whether you're going to go for a loan or not go for a loan, you should be projecting out at this time anyway. And then also look to prepare a cash flow forecast based on the back of the projection. So with the cash flow forecast, you can see specifically where the months are that you need it. If you've got a lot of money in the bank now and things are okay, it might not be that you need to go and get the loan right now, but based on the cash flow forecast, maybe in 2 months is when you're going to need the money. Now, as everybody knows here with banks, they don't generally move too fast. You've still got to do applications. You've still got to go through processes. You've still got to get things ready. So if you're thinking that things are going to be down in 3 months, let's say, then you should be getting your stuff ready for that now. And my advice to that is speaking to your accountant, speaking to your bank manager, asking what's available, how it works for you, getting on the front foot, and then you can work out how to put it together. The government's also said with a lot of these loans, they're trying to cut red tape as much as they can, while obviously still conforming to the acts that are there. Also, there are state government incentives. Once again, all these links are on Facebook for anyone that's just jumped on. If you go to Facebook, you can click to the website and we'll have all these resources there. The Queensland government's offering a $250,000 loan. That's probably one of the best loans I've ever seen. I mean, there are no repayments and no interest or low interest and no repayments for the first 6 to 12 months, I think, from memory. And also there are payroll tax deferrals, waivers of fees for tourism industry. I know the Victorian government's offering $10,000 grant and also waiving different payroll fees. But if you click on the relevant links here, you'll be able to see what's kind of available for your business. You can see anyone that's just jumped on as well. Just remember, if you go in the Q&A box, just put your question in. And we'll endeavour to answer it as I kind of go through the webinar. So cash flow forecasting, we're going to actually be running in 3 to 4 weeks a session on cash flow forecasting and how to prepare your cash flow. I think at a time like now, probably it's more important than ever to be doing this type of planning and this type of forecasting for your business. So I've just done a mini cash flow forecast with a kind of graphic table over here just to see, and this is kind of what I illustrated previously, the months that go down are the months that show where you might need cash flow the most. So if you're this business, you may be saying that in July and August, we're going to be facing some cash flow challenges. So in that scenario, that's particularly where in May and June, you should be talking to the bank manager and finding out how quick they can get you money, what you need to get that money, and starting to get all the applications and everything in line so you're able to get that in place. And also strategically plan where to invest your cash. Like if with your cash flow forecasts, you have some months that you're going to be making really good cash flow, how are you going to invest that and where you're going to put it in the current climate. And then Also, in the next webinar we'll talk about some of the drivers around cash flow. So if you are seeing that cash flow is going down, what can you do to increase the cash position? So obviously, you know, looking at your accounts receivables, how you're bringing money in, looking at your accounts payables, how you pay money out, looking at your margins to see if your margins are all right. What I've noticed in the industry so far since this has started is a lot of people have changed their payment terms. So some people are requiring more deposits up front. Some people are doing 14-day payment terms instead of the same 30-day payment terms that they used to have. So I think now's an essential time to look out for cash flow. Obviously, the construction industry has still been moving and still been going, and everybody's still been doing work, but the cash is probably a lagging indicator of that at times. So it may not be you feel the cash effects in this until July, or until June and July, when it starts to hit harder. And then with these cash flow forecasts, most likely, if you are going to a financial institution, I know 80% of the people said they haven't currently got loans, but if you are going to a financial institution, the first thing they're going to ask is what you need the money for and what assumptions have you used in your projections or cash flows. So that's why it's crucially important that you look at these things to understand and have these in place. I see there's a lot of questions coming through, and a lot of questions are being answered. So yeah, anyone that has questions, just keep pushing them through and we'll answer as we can. So business pivot. I think now more than ever, it's an important time to look at your current business model and work out where the opportunities are in the market. I've seen some businesses that have pivoted really fast. Even bigger organizations through this time have pivoted really fast. I mean, there are companies out there now producing hand sanitizer and selling that. I think, you know, with IT providers, they've been pivoting to the whole work from home scenario because they realize people are working from home. I went to buy a desk and couldn't get it because office supplies had ran out of desks. So I know there are a lot of people on the webinar that have factories. So making desks, you know, there's definitely as many opportunities in this market as well. And I think you need to look at your business model and see what you can do what you can do to maximize on the opportunities there are in the current market. I think another thing is you've really got to now more than ever be on the front foot and be talking to all of your suppliers and talking to all of your customers. As I said before, we've had some customers that have changed their payment terms from 30 days to 15 days that are supplying materials to trades. And they've had to do that, obviously, to protect their cash flow. But if they had 80 clients, they went out and 78 of them agreed to the new payment terms. So they proactively got on the front foot, started talking to the customers and putting some plans in place. The other one is your suppliers. Obviously, if cash flow is tight, it's getting on the front foot to the suppliers and trying to work out, you know, what you can do to pay where you're at financially, and that, you know, potentially if you're getting a loan in 2 months and you know that there's money coming in, you might not be able to pay for 2 months what you were paying before, but maybe you can make that up. So I think the important thing there is getting on the front foot to the suppliers and the customers to let them know where you are. And with the leases, I think I discussed this early, communicate early with the landlord. If you can't make your lease repayments, speak to your lawyer straight off the bat, speak to your landlord. You know, I've had some businesses, and this might not be for everybody, but I've had some businesses sharing their profit and loss with the landlord just to say, look, revenue has dropped 30%. You know, what can you offer? And they've made agreements, and that's pre the changes that they've announced. So I think everybody, we're all in the same community together, essentially. So I think now's the time to try and work together as much as practically possible. Then the fourth point I had on there is become profitable. So even if that makes sacrifices for now, I know that some people are trying to reduce their costs and get to profitability. And I think that's what you have to do, but it's hitting profitability as soon as you possibly can, and that may require sacrifices. So whether you're holding too many people and some you have to let go, or whether there's suppliers that now you don't need anymore, it's looking at your business and working out where profitability is. I think on the start part of that is making sure the business model is working and the target you're trying to target, and then finding out how can we make the business profitable as quick as we possibly can. The last thing you want to do is go and put a whole bunch of money into the company, and in 6 months you've burnt through that, and then we're back into a restriction. So I think you've got to be able to find profitability. And I think some of that can be letting go of the way that we used to do business 2 months ago, 3 months ago, because unfortunately that's gone now. And what we need to do is face the new reality of the way business is working. So it's kind of, and I know for some people it's quite hard, but it's letting go of the way we used to do business and looking at things and working out how we can do business moving forward. And improve the systems and processes in your business. I've had a lot of clients now are strongly working on systems and processes and what they can do to improve those, what they can do to run more efficiently. Some examples are you may be have a factory and been running mainly by word of mouth, and you may move to an e-commerce solution where you can sell things online. There are definitely opportunities online. The traffic now more than ever has been online because everybody is online now. So I've had other retailers that are now looking to go to more of an e-commerce solution as well. So I think now more than ever is a good time to look at the business and the systems and processes involved in your business and seeing where you can tighten those up. And then hopefully once the restrictions are lifted, the business will really be able to take off from there, because there is a lot of money that's went into the economy. I see a lot of the questions are being answered through now, which is great. An action plan. So from the webinar today, I would say your best action plan is to go and click on the links that we've given, find out what is available for you. There are some search engines that you can go to that will actually show you all of the stuff that's available to you. And then fill out as many applications as you can that relate to your specific circumstance. So I think get on the front foot and get all your applications done so you can get what's entitled to you. Unfortunately, some people are going to miss out on some of the incentives because they weren't taking payroll and they were taking directors' loans or trusts or whatever the case may be. And I think if that's in your circumstance, and that's just a circumstance, and you've just got to get what is available for you and then look at the business and how you can become profitable. Review your cash flow forecast. So I think now is definitely the time, if you're not doing planning, like profit and loss and forecasting and everything like that, I think now's the time to go through and get all that stuff done and review your cash flow forecast and work out how you're placed for a downturn. I think you should have different analysis on there, like what if I dropped by 40%? What if I dropped by 20%? What if it went for 3 months? What if it went for 6 months? And I think that type of planning will really be able to lead you to making these decisions on what you need to do with the other aspects of the business. And now's the time to contact your broker, your bank manager, your accountant, your lawyer. Like now is the time to engage all of the professionals that you have around you. They form part of your team and probably part of your external team, but they all have insights into different areas in your business and where they can help you. So now's the time to reach out. And if you're having major difficulties, reach out to people in your network. So obviously, you know, with business not going well in some people's cases, it can lead to different types of difficulties. So, you know, you're not alone. There's a whole network of business owners out there, and I can guarantee that most business owners are going through the same kind of challenges that you're going through with your business. So now is the time more than ever to reach out and kind of talk about your situation, see what's available for you, and throw it around and see what some solutions are. So that's a bit of an action plan that people can implement from the webinar, and hopefully it relates to their circumstances. So I just had one last poll that I was going to do. So if anyone would like to learn more about Tradies Accountant, feel free. Yes, no, not at this point. No, thanks, I'm all good. What we'll do from here as well is we'll open up some more questions. So if people want to ask more questions, they can. We can also go offline after this for specific questions if people need to ask those. Just to wrap up, I'd like to kind of thank everyone that helped us put it together, especially a Sophia, Ostron, the Wall and Ceiling Association, and Trade Mutts. They were really fantastic in helping us get this webinar out to as many people as we could. But feel free, we can open the questions up. So anybody that has questions, just put them up there and we'll continue to answer those questions as much as we kind of possibly can. Everybody can also go onto the answered questions just to see if there are questions that that have already been answered, if there were questions that people were going to ask. So you can actually go on there and view the answered questions. I can see there are still lots of questions coming through. So I'll leave this open for a little bit as we ask more questions. All right, well, it looks like there were heaps of really good questions asked there. Hopefully, we've answered a fair few of these questions, but it looked like there were some really good ones asked. What we might do is we might take this offline now, and anybody that has further questions, you can contact us directly. So if you email us through admin@tradiesaccountant.com, or if you're already a client and you have a relationship with Kelly or Natalia, just email them directly. And that way we can get back to you with some more specific answers in regards to the questions. But thank you for everybody coming on board, and I hope everybody gets through this thing. Thank you.